Good afternoon, ladies and gentlemen. Welcome to another episode of Crypto Society's Market Overview with myself, Pumpeye, and Bilo, the former bear, who is now a bull, and he's loving the current market action. Hello, Bilo.
Hello, and I'd like to say it's my right to choose. Hope everybody's doing well. Welcome to another episode, and we're just going to dive right in. For those who haven't been with us before, we always start by signifying the previous grand cycle, 1, 2, 3, 4, 5, culminating in a whole bunch of bad news coming from Elon, China, and the IRS. All of which is now behind us and mostly resolved. We had an ABC correction, and we're in this horizontal accumulation. Some call it accumulation, some call it a prelude to a further distribution, but let's just call it a horizontal channel for now. We'll start off by comparing the current horizontal movement to the Wyckoff distribution pattern, or accumulation pattern, which is right here. Assuming we came from on top, we did the ABC, and we're right now in this horizontal phase of accumulation. We'll get to a different view right after I explain this, but very basically, the Wyckofian logic model looks something like this, where we've already completed the selling climax and we're in this horizontal phase. Some say the low volume failed sell-off already happened, which if I go back and zoom into it, or if I actually go to the Wyckoff accumulation chart that I have somewhere, here it is, would be signified by this here on the 22nd of June. But like we said last time and the time before, never do we have anything that is always so obvious that plays out that way. And this was just too obvious. And indeed, what happened is we went up, came back down. This was supposed to be the test. The test is right here. And lo and behold, we came down even further. So this was a bull trap right here. This was a very nice bull trap, because everybody's following this Wyckofian logic and expecting it to follow to the T. It is definitely not following it to the T right now. So if we take another look at this, there's no reason anymore to believe that this was necessarily the low volume sell-off, which is the prelude to the bull market continuing. There's really no reason for us to believe that right now, unless we see Bitcoin kind of complete, and we'll get to this later, a larger inverse head and shoulders, making it to the top of the channel and continuing on up. If that doesn't happen and this inverse head and shoulders does not play out, I would not be surprised if we make another low here back to the 28, 27 region in the next week or so. If we go and look at the charts on a more detailed as we go, so you guys can see them clearly, but I'd like to talk about this line right here. I'm just going to make it white. So, oops, let's make it another color. Let's make it yellow. So this resistance here has recently been overcome. As you see here, we broke above it at 32.7. It's not something that's been, month old, but I mean, it's still quite a few hits, and finally we broke through it. So that's a positive sign. The next line I'm about to draw to highlight, and I'll do it in blue, is also another resistance which we broke above. You can draw this many ways. I mean, it doesn't really matter, but more or less somewhere here. So we broke above that as well. This is also a good sign. And then finally, the 3 points that we here have been referring to over and over again for the past few weeks are the 200 EMA on the 4 hour, the 200 EMA on the daily, which is the 1200 EMA on the 4 hour, and then finally 42K. And I'll explain to you why 42K is important. But for now, what we do see is that we went above the 200 EMA on the daily, which is it's a good level to conquer. It's definitely brought us some positive vibes into the market, and people are excited. And the next level they're looking to break would be the 200 EMA on the daily, which again is the 1200 EMA on the 4-hour. But there's actually other levels to break. I mean, these are not the only levels that are important, but these are the levels that I personally and a lot of people are most likely eyeing. As you can see here, if you're looking at the VPVR, the visible range volume indicator, the visible range volume indicator doesn't indicate so much volume at a particular time, but rather volume at a certain price. So this red line coming out of the VPVR signifies the point where the price point, I should say, where there's the most interest, so buying and selling. So this, if you're below it, acts as a resistance, and then of course, if you're above it, it acts as a support. But you could see that there's quite a bit of resistance above us. But this point also obviously would be an important point to get above before we try to get above the 200 EMA on the daily. Why 42K? So everybody, once Bitcoin came down from its all-time high, everybody was looking to 42K for the market to turn around. And indeed, 42K is important, but it was more important at a certain point in time, and I'll explain this. So as you all know, EMAs are moving averages, and moving averages change with time because it's essentially the average of the candle you're looking at. So in the case of a daily, it's the exponential moving average of 200 daily candles. So the longer you stay below the 200 EMA, the more the 200 EMA is going to curve down, right? So if 42K was important on, say, the 21st of May, because the 200 EMA on the daily was at 42K on the 21st of May, well, the longer we stay below the 200 EMA on the daily, the lower the 200 EMA on the daily gets. So currently, as we can see here, the 200 EMA on the daily is precisely on, at least Binance, $38,478. Now that number, exact number, is not so important. It's the region that's important, guys. Remember, we're looking at Binance right here, but there's Bitfinex, there's BitMEX, there's so many other exchanges, and each exchange is going to have a slightly different number. So the region is what matters. The reason 42K is so important is because it's the top of wave 3, and therefore is going to be significant resistance at this peak. It's also where you see the ending wave diagonal in wave 5, 1, 2, 3, 4, 5. It's almost also at that level as well. So 42K is going to be an important figure before we can say, all right, we have a very good fighting chance to get back on with our bull market. That being said, Bitcoin has seen some bullish news lately. So you guys all remember that Elon Musk FUD about Tesla not taking Bitcoin because Bitcoin was not ecological, was bad for the environment. Since then, there's been a lot of changes. The Chinese government at the time also had put a lot of restrictions on coal-powered mining because it was not ecological, and China's coming under a lot of pressure from the rest of the world to use clean energy as the world's largest polluter. And since then, a lot of miners, not sure what percentage, but it's quite a bit, the majority of miners have shut down mining activities and have relocated and have moved elsewhere. They've not all started up again because the hash rates are not what they used to be, but that news, as bad as it was at the time, is now behind us and is actually positive. And we said so at the time because 67% of the world's mining was happening in China. So if you're looking to Bitcoin to being decentralized, I mean, truly decentralized, it didn't make sense that 67% of it was being manufactured, mined in one small area. So Elon at the time had said that, it's not ecological, so we're going to stop accepting payments using Bitcoin, this caused quite a stir every time Elon says anything. That he does move markets, unfortunately. But recently, he actually said that they haven't, neither he nor Tesla sold any Bitcoin. Whether that's true or not is not really important. It's just that the fact that he said it was a positive thing. And he also hinted that very soon, Tesla could reverse his position and start accepting Bitcoin again. And being the market mover that he is, that also is and did have a positive impact on Bitcoin. He's also hinted that he may himself, I believe, start mining Bitcoin, if I'm not mistaken. I think I read that somewhere. But just to say that there's been quite a bit of positive news out there. And then there was the B Word conference that happened where he spoke. And let's just say people are cautiously optimistic.
So, Bilo,
so on that, yeah, go ahead.
Have you listened to the B Word interview?
No, I read snippets of what he said.
I'm yet to listen to it. I did see that he was wearing a Bitcoin T-shirt though, and he was very positive about everything, which is quite nice. I was just wondering whether you'd had time to listen.
No, I read snippets of certain things that he said, and it was really more on the bullish side than the bearish. But he was being coy. I mean, he wasn't, coming straight out and saying, "Oh yeah, I'm totally for it," and we're gonna this. And it was him being coy, playing his games. He likes that,
Of course,
he's not going to be doing it straightforward. But I mean, it was positive. I think it was received with a sense of positivity and a sense of hope that, you know what, this guy is kind of gonna back Bitcoin again. So that's what it looks like. So we spoke about the Wyckoff accumulation. We said that initially we were looking at this being the low volume sell-off, that this being the low volume sell-off would only happen if we had a 1, 2, and then 3 from there. This 2 came pretty close to the 0, this being the 1. So it just doesn't look like it should. But then again, anything that is followed to the T, I would be very weary, because this is an opportunity for the larger players to take advantage. It's like a casino, guys. The casino always wins. And the only way for the casino to make money is for the masses to lose money. Not everybody can make money. If everybody makes money, well, it just doesn't happen. There has to be a supply and a demand. So I don't think this Wyckoff accumulation is going to be followed in a way that's obvious. And right now, or up until a few weeks ago, it was just too obvious. And we, I think, repeated it here a few times that this was cause for caution, because it really was too obvious. Last few live calls, we had the pleasure of Sylvia with us on the line. She was explaining to us a little bit about on-chain data. I could just kind of do a little bit of a brief introduction of how you guys can take advantage of this free information while we're on the topic of Bitcoin. And I'm not going to spend too much time on this. It's not my expertise. I definitely want to spend some time learning it, though, because it is really quite interesting and is definitely very useful. If you go on CryptoQuant, and I'll just limit this to CryptoQuant on just a couple of charts, some of the options you'll get is you'll get all exchange reserve. So looking at the chart, and this is, again, quite interesting, is this is so the price of BTC is in black, and then the reserve is in red. And the reserve is, and it says it right here, the amount of BTC held in all exchange wallets. The number increase means an increase in BTC supply for selling altcoins, purchasing, and margin trading. Of course, guys, and it's sometimes counterintuitive, but just because BTC is flowing onto an exchange does not necessarily mean that the price is going to dump. Sometimes it's out of precaution. The people that are forwarding their BTC onto the exchange are just worried that there's a dump, and they want to be in a position to quickly sell if they need to. Sometimes it's used for reverse perpetual futures contracts, where you go into a long or short position using your Bitcoins. And the same goes for USDT. I mean, you need USDT to short, for example. So sometimes people say, "Oh, look, there's a lot of USDT coming onto the exchange, and that means the price is going to go up." Although it technically, you do need USDT to buy up anything, it doesn't necessarily mean that's what's going to happen. And back when not everybody knew this, I think seeing USDT flow into an exchange, if you knew how to check, or you weren't connected to a Twitter whale group or a robot or whatever the case is, whatever your alarm is for inflow and outflow, when not a lot of people knew about this, I think it was more of an accurate signal. But now, again, just think back to what I said earlier, when everybody knows something, can't necessarily become, that valuable. It's like if everybody knows this is what happens when USDT flows into an exchange, everyone's going to behave the same, and then the opportunity for the bigger players to make money is just not going to be there. Because again, the only way that bigger players make money is by taking it away from you, the smaller players. So if everybody knows the same thing, there's not that market to make money for them. So just take all this information with a grain of salt and try to analyze it yourself and see how many times, say out of 10, it actually worked out that there was an inflow and the price went down, for example. And this is really what I think on-chain analysis is. It's looking and trying to figure out for yourself how to read the charts and find patterns that repeat themselves more often than none. And then you're now playing with the probabilities and success rates. So back to this chart. So the price, we see that kind of, as the price is going down, the reserves were going down, and then they kind of went back up. All exchanges net flow, what that tells us is, so it's the Bitcoin coming in minus the Bitcoin coming out. So if you're above the chart, there's more Bitcoins flowing into the exchange than coming out. If you're below the chart, there's more Bitcoin leaving the exchanges than coming in. So obviously, if there's a lot of Bitcoin leaving the exchanges, that's a positive sign, because people that are taking out their Bitcoin, especially the larger players, are not concerned for the time being, whether they're right or wrong, that the market's going to dump. So when you see this histogram close to this zero axis, it's just telling you that there's no positive strong signal either way. It's not like leaving in droves, and it's not coming in droves. This big tall peak that we see here happened on July 16th. And as you all know, on or around middle of July, I can't remember the date exactly, but there was this grayscale unlock of many. Again, I don't know if anybody on the call remembers the exact amount, but it was a lot of Bitcoin that was about to be unlocked and dumped. So out of, again, an abundance of caution, and this is a perfect example of us saying an abundance of caution only, there was a large net flow, meaning a lot of Bitcoin came onto the exchanges, but it didn't result in a dump. So this is just a perfect example of, just because you see a lot of Bitcoin go onto an exchange does not mean it's going to dump. Because look at the price.
It was, Bilo, it was 41K on the 18th.
Yep.
So that it was 41K BTC or GBTC that got unlocked on the 18th.
41,000 BTC was about to get unlocked, you're saying. Okay.
Yeah.
Cool. So that's what I mean. So here, all exchanges inflow. So look at this here. This is the one we're talking about. All this Bitcoin came onto the 38,000 Bitcoins flowed into exchanges, and look what happened to the price. It dipped a tiny little bit, and then it went back up. So this is just a perfect example that you really need to use this data with a grain of salt. Don't automatically assume that just because there's a lot of inflow into exchanges that the price is going to dump. Sometimes it really is just out of an abundance of caution, and either the people putting this Bitcoin on exchanges are just worried that, you know what, I don't want to be stuck trying to transfer my Bitcoin onto an exchange to sell it. If it does dump, I want to be able to sell it quickly. Or sometimes think of it that it could also be manipulation, because if I'm playing against you, I'm playing poker. I don't want you to know what I'm about to do. I want to trick you. I want to bluff you. Well, maybe this is a good means of bluffing you. Maybe me and my whale buddies, or I'm a big enough whale that I can actually make this histogram move. I'm going to move Bitcoin onto an exchange just to confuse everybody because I'm about to buy. So yeah, the message is just take it all with a grain of salt, and try to analyze it further and try to get a good understanding for it. The other interesting thing is the miner flow. Sylvia spoke about it last time. I'll talk about it a little bit more. So miner flows tell us total amount of Bitcoin transferred from all miners' wallets, but there's another one. Hold on, which yeah, anyway, it's about the same thing. So we see that during the dump from the all-time high, the ABC, that miners didn't really transfer that much Bitcoin out. They didn't really sell that much Bitcoin. And there was analysis, not done by me, just analysis that I've read from reputable sources, that the dump that happened from the all-time high was led mostly by retail investors that came in somewhere here. So they came in here, Bitcoin started to drop, they panicked, and they just sold, and then the old stop loss cascading effect. That's what a flash crash is an activation of stop losses. Just cascaded the Bitcoin price down here. But then there was this very strong. You don't see it on a line chart. You don't see the candles, but Bitcoin actually came down to here and had a very strong bounce. Which again was an indication that there was just a massive amount of buy orders at this price.
By the way,
yeah,
I have a question. I think FTX just announced that they'll reduce the amount of leverage, the max leverage, to 20x only.
I'm sorry, could you raise your voice? I can't hear you well.
I think FTX just announced that the max leverage that will be allowed in their exchange is going to be 20x.
Oh, did they? Did they reduce the leverage?
Yes, they're going to reduce it.
I didn't know.
Do you think other exchanges will follow suit? And how would that affect prices? I mean, I would think that since there isn't like 100x leverage, if a stop loss, cascades down, it wouldn't be as severe.
I think it will help to stabilize the prices as well. And I actually think that's a positive move to not have quite such extreme leverage.
Definitely. A lot of, leverage, look, a lot of people try to, it's gambling. I don't know how else to put it. If you're going with a low leverage, like a 5, 10, 15, 20, maybe even 25, you know what? You could get lucky, but you could stand a good chance to make a good trade. But if you're going at 120, 125x, unless you have a small position in a wallet that's cross-leveraged with a lot of money in it, if you actually make money, it's just luck, because nothing goes straight down normally unless you happen to catch one of those flash crashes and you just happen to be there. Normally, it zigzags up and down. So either you have a liquidation price that's very close to your entry when you're at 100 and 125x, or you put your stop losses, as you should, in the right locations. You'll get stopped out one way or another. So it's really like gambling. So bringing down the leverage to, you said 20. I mean, that's a decent leverage. It's I remember trading on Bitfinex on margin trading, and you really had to qualify to go more than 5x. And by qualifying, you had to have a certain amount of experience. You had to have a certain amount of money. You had to have. So it is very irresponsible, I find, of some exchanges to just allow anyone to go that high in their leverage trading. I mean, it's setting people up to lose money, in my opinion. So I think it's a good thing. All right. So yeah, just wanted to do a little segment on chain. That's something that I'm really interested in myself and trying to learn more about it. If we move on to Ethereum, so I said earlier today in the chat that there was a short opportunity here. I'll just move into a smaller time frame. We were around here, and the reason I said that is, one, we were at the top of this channel, not a perfect channel, but certainly the top of it is. But also that we were starting to see some bearish divergence. And on the flip side, I'm also looking for a lot of the coins to start this inverse head and shoulders that we're seeing a bit everywhere. So the inverse head and shoulders is somewhere here. And if I just draw it out, where's my triangle? I forgot where my triangle is. Here. So it would look something like this. And this is a very viable looking inverse head and shoulder. I mean, it doesn't get nicer than this. So if this was the neckline and the confluence of the neckline plus the descending channel here, plus the bearish divergence, led me to believe that this would be a good place to short. Of course, it is a scalp. It's not like we're going down. It's just a scalp. But you would have done well for yourself if you shorted here and kind of took profit or got out of your trade, I would say, at the 618 at the most, which just looks like the right place to get out, somewhere around here. And why does it look like the right place to get out? Well, we see the cluster. Again, where is a good place to get out is when you're going to start getting support if you're in a short. And where do we get support? We get support around this cluster right here. You can see this zone here when it comes to, I'll just take this out. It's just too messy. We could see this zone here in the VPVR is a zone where once we get below it, there's not a lot of support. There's not much going on here. So I feel like we'll get right down to here. And then it's going to be somewhere here in this green box where I predict there would be a bounce, hopefully to go up and complete this inverse head and shoulders. But it doesn't have to, right? There could be huge buy orders waiting here because everybody's expecting it to go lower. But if you went in here and you went in at let's say a 25x, you're in profit here and you could take out a bit of money and let the rest ride and see what happens. Always putting your stop loss somewhere above the neckline and above this channel. But that's about it. I mean, for ETH, there's a lot of coins that are in this formation right now, including Bitcoin. If we go to Bitcoin, we see it here, right? This is the neckline in pink. So I'll just do that here too. If you need it, I'll just draw the middle one, but you'll see it right away. It's very obvious. So here, this would be the left shoulder, the head, and right shoulder. And then if we do a fib retracement to see where we could potentially land, well, this is that area again, the 618 area, but you could see that Bitcoin has a lot more resistance coming down there. So it might not make it all the way down here before it bounces. It might bounce even sooner. And we see also Bitcoin dominance is on its way up. So there's more money flowing into Bitcoin right now, even though it's short term. We are in an uptrend. We saw it here. We're seeing it again here. So I personally think we're going to see, where's my brush? Here we go. I personally think we're going to see something like this over the next few weeks, or maybe even less. I feel like Bitcoin dominance is going to go up here and maybe stabilize a bit and allow for the altcoins to follow.
It almost has to go up, really, doesn't it? Because as Bitcoin increases in price, the market dominance will automatically increase. I don't think that the altcoin market cap will follow suit quite as quickly as Bitcoin will go up once it starts to move properly. I don't know what your opinion on that is, but
yeah, makes sense.
there's a lot of people who transfer their money between altcoins and Bitcoin. I know, like your standard investors, like a lot of the people that are in our group and other groups that we're in, they don't necessarily move their coins from one to the other, but there are a lot of traders which will flip between Bitcoin and altcoins to get the maximum amount of each one.
Yeah, and I think there's a lot of traders with the strategy to accumulate as many satoshis as possible. So
Indeed,
they'll trade with the Bitcoin pair always, because they don't really care about accumulating USD. They really care about accumulating more satoshis. So I think those are the people, and there's a lot of them, that explain the reason behind alts dumping when Bitcoin is pumping or dumping. It's because it's always that pair that's being traded rather than the USDT pair. And early on, when I started looking at crypto and learning about crypto, most of the people I followed always trade the BTC pair. But I personally don't like to trade the BTC pair because I like Bitcoin. I would love to hold more Bitcoin, but I find that it's hard to manage the result of your trade when both coins are variable. It's a bit, it's a bit more. Target. Yeah, but if your only and sole purpose is to accumulate satoshis, then you can look at it as, well, doesn't really matter if the price of Bitcoin went down. I have more satoshis, and that's all I care about. So I don't know. It's a mindset, I guess. We see a lot of hype on this coin here, Axe. It's a gaming coin, and it's a gaming governance coin. I mean, gaming and NFTs, right? But gaming now, you hear about it more and more. All these gaming coins are doing exceptionally well. And here's another one that, I mean, look at this. On the 20th of July, like a few days ago, the price was $14 and it went up to $48 yesterday. Very, very parabolic looking wave here. So it's just, I think it's not finished. I think really it should hit somewhere here. This is just a temporary break, but I would be targeting $55. And I don't think, despite what many may think is obvious, that, okay, we had such a strong write-up, we're going to have a strong correction. Normally, I would agree, especially that it's parabolic. But looking at the wave structure, and this large wave one is obviously a 1, 2, 3, 4, 5, and inside of it, there's 1, 2, 3, 4, 5, and so on. But if this was 0 to 1 and this is 2, well, wave 3 has to be longer than wave 1. And that's why I'm saying, and it is, I mean, it is, because wave 1 ended somewhere here. But given the parabolic nature of it, I would want it to go a little bit higher. I would expect it to go a little bit higher. So I think there's more upside for this coin before we do a stronger, let's call it a stronger retracement. That's just, it's an opinion. I mean, this is not based on very heavy TA, just an opinion based on the wave structure that I see here. Yeah, it's not financial advice. It never is. Looking at a few coins, guys, I mean, again, you see this wave structure is just everywhere. These inverse head and shoulders, like they're all ready to pop. It's a very nice thing to see on several coins, because it really buys into a bullish narrative. And everybody sees these. I mean, it's not so hard to spot. So I personally think there's a few coins that nobody knows the bottom. We say this all the time. Nobody knows where the bottom comes in, but it's all about DCA, dollar cost averaging. Coins that are fundamentally sound, very strong. I mean, Polkadot, forget this year, forget the next year if you want. Just think a few years down the line. Does anybody really have a doubt that Ethereum, Polkadot, Kusama, Solana, Cardano are not going to be multiples of what they are today? I mean, think of it that way, and think of it in terms of, if in your conventional investment portfolio, if you're in stocks or indices or whatever, where are you going to think about having a 3, 4, 5x coin that's not a pre-sale, that's not a gamble, that's pretty fundamentally strong and has a lot of support and hype about it? And here you go. I mean, you have it right here. Before crypto, people were happy to make 2% on a project, but here we are in a situation where look at the chart. I mean, it's just insane. We were at $50 not long ago. We're at 13, and it's DOT. It's not some shit coin. It's DOT. It's one of the largest market caps out there. It's top 5. What is DOT now? I'm not sure, but I mean, it's one of the larger ones. I strongly suggest, and this is financial advice, if you have some money set aside, or if you're in some shit coins that are losing and you're waiting for them to become profitable before you sell them, that's a mistake. I think it's a mistake. If you're in something that's losing, you know what? Put it into something that's better. Put it into something that's going to do better. That's going to give you a better long-term outcome. And flip it into, instead of, if you flip something into USDT, well, then you took the loss. Okay. But if you flip something into another coin that is fundamentally strong and is going to, you have good reason to believe that it's going to do well, it's not a loss. It's just a smart move. So holding on to shit coins, guys, that aren't doing well and you're hoping for them to go back up, it's an opportunity cost, because now you have an opportunity to enter very strong fundamental coins that are sitting at very, very good bargain prices. Am I saying that the coin is not going to go down more? I can't say that. Nobody knows. Nobody knows where the bottom is. But that's where we go back to dollar cost averaging. So also, buy a little bit of here.
Bilo,
excuse me?
Sorry, I just wanted to interject and say, also, you've got to remember that, I'm talking not to you, but to the listeners, that if everything is down, then you have a floor where you can be switching your coins around without a huge fear of that one's going to start going up without the other, because everything is currently down a lot. And so you can rearrange your portfolio at the moment, obviously taking into account the tax implications depending 100%. On what country you're in. But this is a very good opportunity for you to switch around between things that might not necessarily be that great an investment at the moment, like Bilo's saying, into something which is fundamentally stronger and is going to be with you in the long run and you can believe in. A lot of people tend to make investments based on advice from other people and things that they see on various different Telegram groups and Facebook groups and other places, maybe crypto Twitter, without really doing their own research. And then you get messages from people saying, oh, I'm in this coin, it's gone down loads and I don't know what to do. Is it a shit coin? And so on and so forth. When realistically, if they'd done their research and they believed in the project and the products that they've got coming or that they've already got out, then they don't need to worry about it, because they can have faith that in the long run that coin's going to do really well for them, or that project is going to do really well for them, which is where you should be looking at things, not necessarily as a coin, but as a project and as a team and people that you can get behind. Back to you, Bilo.
100%. And
sorry to interrupt.
Just to go back to no worries. It was very well said. Back to DOT. I mean, just from a TA perspective, it's just yummy. I mean, it looks good. You have 3 contacts here. You have 3 contacts here. We're in a descending wedge. Descending wedges are normally bullish. Take it a step further. We said we have this inverse head and shoulders here, right? So let's just zoom in. Let's just play this out a little bit and look at the cascading effect of what could happen. And yes, it's only could happen, but it's based on sound TA. It's not based on whimsical thinking. So if this is an inverse head and shoulders and it plays out the way I'm saying it should, or I'm hoping it should, well, the target of this inverse head and shoulders is obviously the bottom of the, this is too big, the bottom of the head to the neckline, transposing it on top. We get somewhere, let's say this is the technical target, let's call it, okay? It's not necessarily what's going to happen to the T. But what's interesting, guys, is look at this VPVR in this region. If we just make it above this line, there is so little resistance for us to continue back on up. And what happens here now is we start looking at another inverse head and shoulders, which is this one here. Look at this. So, oops, excuse me. So forget this small one. If we make it up here, which let's call it, this would be the point of the point where we would kind of maybe head back down. Now, what I'm looking at is this being the left shoulder, this being the head. Oops. And now my target for this inverse head and shoulders, again, it's the technical target. Technical target means just a fancy word for when you read a book on inverse head and shoulders, how do you find the target? That's how you find the target. But the target for this inverse head and shoulders is now sitting at $24. Okay, and that also makes kind of sense because that's the point of more or less where we see the most resistance on the VPVR. So to me, it's just looking really, really, really good. I could tell you that I personally bought. I had a buy order here and it filled, and I'm happy that it filled. And you know what? I'm not going to be unhappy if it goes down more. I'm not going to care because long term, I really believe in the project, and I think that one day I'll look back and I'll say, wow, I wish I bought more. I know for a fact. It's just like everybody else. I also have limited funds and I can't just keep on buying. So whatever I can buy, I will. Whatever shit coins I own, I'm going to review and see if I can flip them into projects that have stronger fundamentals. Kusama is another one, guys. Kusama is $178. Look at the all-time high of Kusama. Look at this. Kusama was at $622 not long ago, a few months ago. And in June, it was at 530, and okay, it's gone down. Doesn't that look like, I don't know, doesn't that look like a deal? I mean, think about Ethereum in March of I don't know if it was March or April of 2020. It was around this price. That was the price. It was $178, $180. Ethereum made it to 4,000, what was it, Pumpy? 4,000 something?
4,440, I think.
And Kusama is a huge coin. I mean, it's not just a testnet. People think Kusama is a testnet. It's not a testnet. It's a testnet of sorts for Polkadot in the sense that there are projects that are launched on Kusama first, make sure everything is hunky-dory before they migrate over to Polkadot. But you can actually keep your project on Kusama. You don't need to migrate over to Polkadot. So it's got its own ecosystem. It's got its own projects launching on it for the sake of staying on it, not just testing. There are the Kusama parachain auctions going on right now. A lot of Kusama has been locked up, and a lot of it will become unlocked for the projects that don't succeed. But I personally think that the projects that are going to succeed or will succeed or have succeeded are the ones that have the fundamentals and have held on to the most amount of locked tokens. Now, I was surprised. Personally, I'll be honest, I was surprised with the dump of Kusama around here when it started to go up around the parachain auctions, and we kept on going up, and then we saw this. I was surprised, and I was asking myself, well, how come it did this? And so there's all these locked up Kusamas, and then I remember who said it to me, and it's so obvious. But I mean, I didn't think about it, and I think it's true, is that some people bought the hype and they just sold. People bought because they knew Kusama was getting locked up and people wanted to participate in these auctions, so they just bought so that they can sell. Well, okay, that's fine. I mean, they flipped Kusama and they made money. And that's why we see Kusama here, and we see it in this kind of accumulation. I think it's an accumulation because I can't see it going down much lower. I mean, I would love to buy Kusama here. I would love to buy it here. And if it goes down there, I'll definitely buy some. But for me, this is a good zone to accumulate. It's not a cheap coin. It's not something you can buy 1,000 of. but just buying a few if you can afford it and flip over from some shit coin your friend told you about, like Shiba Moon version 2, or I don't know, something. Even if you buy a few of them, these are coins to be invested in. Same thing with Solana. Solana, I think, is going to have a little bit of a retrace. Not a big one, but a small retrace. Just the charts look like that we'll see a retrace. Again, it's this inverse head and shoulders pattern, but you see, we already had one today, so I hadn't noticed. But somewheres around here, I just felt like we would do something like this and bounce off of the 200 EMA on the 4-hour. But just again, it's one of those coins, Solana. It's currently the fastest blockchain. A lot of hype, a lot of adoption. Everybody knows about it. Came out of nowhere. People did not know about Solana 6 months ago. They've really done an outstanding job with name recognition and marketing, and the tech is really outstanding. They really are the fastest blockchain out there currently. We are having an AMA with Solana August the 5th, which is something we're very proud of. Big cheers to MRX, who helped us get that AMA. This is something we're really looking forward to. And as you may know, our FA department had put out a fundamental analysis detailed report scoring for Solana. It's available in our main chat, so it's accessible to anybody who wants to see it. But Solana really is a great project, fundamentally very strong, and it's going to be in the hundreds this year, in my opinion, as soon as we resume this bull run, which, again, it is also my opinion that we will be seeing all-time highs of Bitcoin this year again. The makings for it are really there, in my opinion. It's about it for me in terms of looking over stuff and discussing a few coins. I don't know if any of you have any questions or anything else you'd like me to look at.
I just had a notification on from the Bull channel.
Yes.
Saying I just bought some more ENJ. Wish me luck.
Well, being a gaming token, I think it'll do well. Aside that it was always a good coin, but just the fact that it's a gaming hype right now. I mean, we're in a gaming hype. Just like at one point the NFT thing. I mean, it still is, but now it's really, really gaming. Anything gaming does well.
Another thing with that is that you guys can also tell that if a channel like the Bull, which has been around for quite some time, is saying "wish me luck," then they are also uncertain about the market and they're being honest about it.
Yeah.
Yeah. Good luck. I'm actually feeling pretty bullish. I know that you're feeling pretty bullish.
I am. I really am.
I did put a poll on the YouTube video, the live YouTube video that we're currently streaming, asking whether people felt that we were bullish or whether we're still going to go down or whether we're ranging or not. So, guys, if you want to head over to YouTube, if you're not there already, then maybe you could answer the poll. Bilo, I'm just going to switch over to my screen for a minute. I might
go ahead
in a minute.
I'm just going to stop sharing.
I'll share to you as well. Bear with me a sec. So that you can see it. This is looking. Can you see my screen, Bilo?
Yes. Yes.
Okay, cool. So this is looking at the daily on Bitcoin, and so Bilo and I have got quite a different approach. Bilo likes to look at the Elliott wave, and it's not something that I've delved into too much, so I couldn't really tell you too much about that. But I have plotted out. Obviously, all these dotted lines are points of resistance that we've hit over time and maybe been rejected off, which could have been potentially seen as in some form relevant at the time. I've also drawn this big thick Bilo line here, this red line coming down, which is referred to on one of my favourite channels as the most important line in crypto. right now, and that's because it joins the all-time high to the next point down where we made the lower high, and then it comes down. And from my reckoning, we're going to be depending on how the price action goes between now and then. If we were still ranging, then we're going to hit this line somewhere around the end of August, maybe the beginning of September, or indeed potentially as soon as a week or two into August. We can see on market cipher A here that this blue triangle signifies that the trend is weakening. So where we've come up a little bit here, we're going to potentially see a little bit of a retracement, or at least it thinks that we're going to have a temporary retracement, if nothing else. We can also see on the stochastic RSI that we are very high, and we've in fact hit a peak line here, 99.91. So I would expect that there'll be some form of retracement at this point. I know that we've started going down a little bit today. We may see a bit more. Looking back over the historical stochastic RSI for the last 3 or 4 months, we can see that any time that we've got this high, we've retraced a relative amount. There's a lot of mixed signals looking at the charts at the moment, and that may be because we're ranging, or potentially ranging. It may be because we had such a significant drop, but market cipher B is showing the momentum waves as moving up into the positive. The MFI is currently red, but we're moving back up towards that center line. These green dots at the bottom here are supposed to indicate that we've seen a turn in momentum, a significant turn in momentum. Although apparently when you're in a downtrend, or if you're in a downtrend, it's not necessarily quite as significant as a definite we're going up from here. We are roughly around the 50 moving average on the daily. We have got slightly above it, which is nice, or we had got slightly above it. I believe that we're now around, we're just below it now. So where we go from here over the coming week is kind of a bit open to suggestion. We'll see what news we get. Hopefully this doesn't close as a doji. If it does, then I would suggest that maybe it might be time to, if you're into it, to short the market. I wouldn't suggest going too high leverage because you never know what's going to happen. But maybe also to sell and buy back a little bit lower. Bilo, what's your thoughts?
So, yeah, I mean, I'm also saying that we should be going down here a little bit to do to complete the right shoulder, right?
Yeah.
Because if you look at this from an inverse head and shoulders perspective, this is exactly where we want to turn down.
Yep.
So that we can make the right shoulder, then move on back up. And there are bearish divergences, so definitely we should be going down here a little bit.
Okay. I haven't had my head too much in the charts this week, so it's only Bitcoin that I've done a little bit of analysis on while Bilo was talking. Thank you very much for joining us, guys. If you have any questions, then now is definitely the time. I noticed that nobody's put any questions in on YouTube, but potentially we've got people that have got some questions that are within our Zoom meeting. Was that Dave I could hear?
I have to.
Oh. Go for it.
But it's actually A, because I'm just getting started. So the two questions is, what's the best way to draw support and resistance rectangles? Because right now I'm just working with lines. I know that sometimes it's not very effective because it might go in a certain range, then go down, or go down to a certain range as well.
Bilo, do you have an answer on this?
Yeah, sure. So the rectangles are interesting and helpful when you're in a zone where it's just a lot of cluster. Lines are good when you have the price action hitting that line several times, then you want to draw a line. But the rectangle is better when you're in a zone where there's a lot of zigzagging within that zone. So there's not really a line, it becomes more of a zone, an area of interest. And remember that what I said earlier is that when you're looking at a chart, you're looking at one exchange. So that one exchange in this case is Binance, but there are 20 other exchanges that have significant volume. And the exchanges, I mean, you're not gonna, it used to be a long time ago in Bitcoin, like in, I guess, I don't know, 5, 6, 7 years ago, that you could have major arbitrage opportunities between exchanges on Bitcoin, where you can buy Bitcoin in one exchange, just take it over to the next exchange and make money right away. This doesn't really exist anymore. What that means is, and what that translates into, is that there is a very close relationship between the price of Bitcoin amongst the different exchanges. And this is normally done with bots. It's just bots that make sure that the price across all the ecosystem is pretty much the same. But pretty much the same equals not exact. And therefore, what you may perceive as a very important number on the chart you're looking at because of a line or an EMA or whatever may not be that exact number that's important, because it's really the aggregate of all the exchanges and the number that would appear on all the exchanges that make it more important. So this is where the rectangle becomes more important than the line. But the line is also extremely important. I don't want to take away from the line, because as you could see very often, and like Pumpeye drew the top red line here, I mean, you know, you can connect these two lines, and the two high points, the all-time high, and then the next lower high, right after. And this is definitely a line of significance. Something will happen on or around this red line the next time we're there. You will see something happen. It might not be exactly at the line, but it's the region that matters. I don't know if that helps or
I'm
if that
very
answers your
intrigued
question.
to see what happens at that point. Very, very intrigued.
Something will happen.
Because in my overview, I think that we can't really go much lower than we have done. And so if we hit that line and go down, then the whole analysis of Bitcoin from the perspective of Plan B and all the bigger on-chain guys and the models that they've got, that changes things significantly if we go down, because we are no longer within that parabolic curve that they've got mapped out. So really we need to break it and be moving up. And of course, with the way that channel that they've got mapped out with the parabolic curve of the whole market cycles, that line for the base of it is constantly moving up, because we're in an upwards motion within Bitcoin altogether. So if we hit that line and go down, then that actually really does change things overall quite significantly.
Yeah, on that though, Pump, isn't it that all models are correct until they're not?
Indeed, yeah, true. But they all point towards a certain movement upwards over a long time.
Oh yeah.
And so if that
Thank you,
changes,
Bilo.
if that changes, then you've got to start looking at right. Well, where are we going from here? Because we are gaining mass adoption, on a bigger scale than we have done since the dawn of Bitcoin, basically. Yet, if we start to go down, then does that mean that the institutional buys and the way that they've manipulated the market, does that mean that that's actually changed things negatively on an overview? Because it does feel like this time it's been different, looking back over the charts, and perhaps that manipulation has changed the pattern of the cycles completely. What do you think, Bilo?
Totally. This is not like 2017, that's for sure.
No.
2017, there was always a question mark. Is this thing ever going to go to zero? Is that possible? Maybe. That's not a possibility anymore.
I have another question.
Too much adoption. It's not going to happen.
I'll tell you what. I've just brought up my watch list and noticed that even though we've been going down today on Bitcoin, actually there's quite a few alts which are looking green, and that are on anywhere between 0 and 14% in the green, which is nice to see.
Not really going down though. I mean, right now it's just like horizontal. If you go on a lower time frame, I think it's just ranging for now. But the what do you call it? The market is ripe for bullishness. Just a few things have to happen first.
I have another question.
Yeah, go ahead.
How would I draw the FIBO retracements the best way possible? Because I think I'm drawing them in a messy way, honestly.
Yeah, sure. So you want to start by, one thing you want to start by doing is setting your Fibonacci retracement tool to something that you, first of all, something that you like, and what information you're looking to get out of it. So what are the numbers, according to you, that you want to see? Is it 618? Is it 382? Is it 5.5, I should say? So that would be the first thing, is to play around with your tool. So it didn't sound too good. Play around with your Fibonacci retracement tool so that you have the numbers that are of interest to you pop out whenever you draw the retracement. So Pumpeye is going to do one, for example, right now. So, you know, on this, you have 1.618, 0.5, 0.382, and 0.
Hold on, I'm going to change that. Sorry, because that isn't my fib tool. It's Bedouins. Bedouins.
So here's
I've got mine. Sorry, Bilo. I've got the 0.88 because Bilo and I have discussed before that that's kind of like the last straw. If you go past that when you're retracing, then you're doomed. Most important level for me is the 618, as Bilo will agree and has probably already said. The 0.5 and the 0.382, when we're in an uptrend with Bitcoin, are usually very well respected. We don't tend to, with Bitcoin, go down quite as far as the 618 if it is a genuine uptrend. As an entry point, if we do go below the 618, not necessarily on Bitcoin but on altcoins and on other stocks, etc., then I use the 705 as an entry point because that's kind of my last go-to, and I'll tend to use it on an upswing rather than as it's going down, because you don't want to catch a falling knife. And I'm a little bit not lazy, maybe lazy. I've got a 0.27, which is my first take profit if I'm trading, and I find that invariably, if we're in an uptrend, then if I've got in around the 618 or the 705, then the minus 0.27 is the perfect take profit, and we pretty much always hit it and generally tend to bounce down off it. And then further up, we've got the minus 0.618 as an extension. That is then my second take profit. I don't tend to go a lot past that. I do go past it if I'm setting up a trade for other people, but they're my two go-tos. And you take your Fibonacci tool and you drag it from the bottom point of the uptrend and the first point of retracement where you've met a top and you're going back down again. You draw it to there, and that's your 1 to your 0. Or if you're down in a downtrend, then you'd go from the top here and draw it down to the bottom of your retracement to then find where you would gain your entry after that.
So the end of the retracement should be a place where the bounce happens.
Yes.
Okay.
Bilo,
Thanks,
got anything
guys.
to add to that?
No, that's pretty much it. That's pretty much it.
Right. Well, has anyone got any more questions? If not, then I'm happy to call that a day for today.
Thank you, guys. It was always a pleasure to have you here, and my usual spiel from the end of each one of these sessions is to please follow us and like our videos on YouTube. Follow us on Twitter, Facebook, and now Instagram. Medium articles with all our AMAs, and just be active in our community. Thank you. We appreciate you, and we'll see you next week. Take care.
Thanks, guys.
Thank you very much, guys.
Cheers.
Bye-bye.
Bye bye.